make sure that you do these things before you remortgage. Speak to a broker at least 3 months in advance. There's a reason why I'm saying that. Check and rate the offer that your bank is offering you. So they will have sent you a notification of the new rate that you qualify for. Don't get your advice from TikTok or social media, and calculate your existing debt, because it may be worthwhile consolidating additional debt in the time that you're doing your remortgage. Make sure that you watch all the way until the end, because I'm going to be explaining the reasons why you should stick with your current lender, or maybe you should consider going to a different lender when you're remortgaging. Hi, I'm Anthony Lindsay, and today we're going to be looking at the reasons why you should maybe switch to a different lender, or maybe you should consider staying with your current lender. Things have changed. There are portfolio landlords that I deal with, and they've done mortgages and remortgages for the last 10, 15 years. And they figure, because they know the process, that they don't need to speak to a broker, or that they don't need to ask any questions. But the mortgage market has changed quite a bit, partially due to, the renters reform. Also, mortgage lenders are looking at different things. They're stress testing differently, and just the process in general has changed. So make sure that before you remortgage, you have a conversation and you consider various things. As with any mortgage related product, do keep in mind that your house could be repossessed if you don't keep up the repayments on your mortgage. So let's just look at this. Don't switch banks. Do not switch banks if you are already with a top tier lender. So don't switch banks if you're already with a top tier lender. I'm not saying never switch, but quite frequently, I do find that people are with top tier lenders, your Halifax, your Nationwide, and when their mortgage is due to be, the fixed term is ending, they contact the mortgage broker and say, I just want to see what else is out there. It is good to shop around. So I'm all for shopping around. But unless the other rate is going to be considerably better, if you're already with a top tier lender, it may make sense to just stay where you are. The switch will cost you more than you're saving if, let's just say, you're with a top tier lender and it's the switch to another bank is going to save you 15, 20, 30 pounds a month. But the cost of switching, with legal fees, valuation, plus the friction of all the admin and paperwork that you have to provide, you might find that it's actually not going to save you any money in the fixed period. So it might cost you £2,000 to switch, but then you're only saving 15, 20, 30, 40 pounds a month. So you're not going to recoup that savings in the 2-year fixed period. Maybe it's purely emotional. This happens all the time. I've been in banking for over 30 years, and people tend to think that the bank is a person. So the people that they've interacted with during their mortgage reflect how they feel about that mortgage. So I worked for all the big banks, and if you talk to anyone, what you will find is some people love bank X and other people hate bank X. Some people love bank Y and some people hate bank Y. I always know something meaningful has happened with your mortgage if you have a really strong emotional view of your lender. And the reason why I say that is, if you set up your direct debit, pay every month, never miss a payment, everything goes smoothly, you won't really have any kind of feeling about your bank, because it's just automatic. But let's just say you've run into financial difficulties or something's gone wrong and you've interacted with the bank and they haven't provided the level of service that you want, then you'll have a view on the bank. But don't get emotional. Don't cut off your nose to spite your face, as they say. Oh, I hate bank X and I'm going to switch just to show them. Don't do that. The bank is not a person. The bank is a bank. They are there to lend money to you, make their money back. Sometimes the experience that you have with the staff members can reflect on the bank, but don't let that cost you in your pocket. If you've had major changes in your circumstances, it may not be a good idea to switch. So the reason why I say, if you've had major changes in your circumstances, you may not want to switch. So for an example, what if your credit rating has gone down since you took out the original mortgage. Maybe you've switched jobs and you're just on probation right now. There's lots of major changes that may have happened in your personal circumstances that if you switch banks or try to switch banks, you may not meet the criteria for the new lender. So if there's things that are going on in your finances or things that are going on in your life that may make it more difficult to switch, you might as well just stay with your current lender. So that's not 100% thing. And you should always speak to your bank and keep them up to date with what's going on with you. But sometimes switching to another lender when you've had major changes in your circumstances is not going to be the best thing. So don't switch banks if any of those things apply to you. And there are some other things. However, you should switch banks or you should consider switching banks if you are currently with a specialist lender. So what I mean by that is maybe when you took out your current mortgage, you had some credit blips or you were on probation or you weren't making that much money. So you're with one of the specialist lenders or what I call the lenders of last resort. So these are the lenders that tend to have higher interest rates. Now, I don't knock these lenders, and you should never compare the lender that would lend to you and maybe gave you a higher rate to lenders that wouldn't lend to you anyway. You need to understand that the rate reflects the risk. So if when you took out your original mortgage, you were given a really high interest rate, now that you've tidied things up, you've put some distance between maybe the missed payments or the blip, this might be a good time to switch lenders because now it may mean that you go from working with a specialist lender to potentially finding a lender that is one of the top tier lenders. The other reason why you should consider switching is if you need to consolidate debt. I did a video on debt consolidation, and frequently people wait until the last minute to decide that they want to consolidate debt. And often they wait until it's not too late, but it's more difficult for them to consolidate that debt because they have had missed payments or late payments or they've had a CCJ. So if you're going to be consolidating debt, now might be a good time to switch lenders. So go through your credit report, go through your outgoings, see what you're paying out on maybe credit cards or other bits of credit. And it may be worthwhile when you're remortgaging, taking out some money to consolidate debt. Another reason, or the key reason why you should consider switching to another lender when it's time to remortgage is if the math makes sense. The benefit of working with a good broker is they'll show you a side-by-side comparison. What your current lender is offering you versus what else is out there. You can calculate how much it's going to save you or how much it's going to cost you. So you should never proceed if the math does not make sense. Or potentially you might consider switching if you need to adjust your term. So what do I mean by that? There are two terms that we talk about when we're doing a mortgage. We talk about the fixed term. So that's the term or the period in which your payments are the same every month. So quite often we talk about a 2-year fixed, a 3-year fixed, or maybe a 5-year fixed, although you can fix it for any period of time. These are the most common fixed terms. But let's just do something simple. When you took out your original mortgage, you were 30 years old and you were really ambitious and quite proactive about getting it paid off sooner than you are going to retire. So maybe you took a short term. So you're 30, you took out maybe a 20-year term. So that's going to take you to until you're 50. But when you're remortgaging, you can actually switch that term. So although you may have taken out a 20-year term, and after 5 years, you should technically have 15 years left, you may decide when switching to another bank to change the term to 20 years or change the term to 25 years just to make your payments maybe a little bit lower. Now, I'm not suggesting you do that. You should always take the shortest term that is affordable to you. But if you are finding that maybe things are a little bit tight or you just want more breathing room, switching to another lender and adjusting the term can help reduce your payments. And maybe you can stack a couple of these things. Maybe it can be a situation where originally you were with a specialist lender because you had some credit blips, and maybe you did a short term. Now you can go to a top tier lender and extend the term And keep in mind, with most lenders, with most mortgages, you can overpay by about 10% each year. So 10% of the balance you can overpay. And I would strongly recommend, if you can afford to overpay occasionally, overpay, because it will make the mortgage a lot cheaper. Here's what people are doing wrong. I'm going to go through the things that people are doing wrong when it comes to getting a mortgage. I'm going to explain some of the key things that I see every day. And in 30 years of working in finance, the things that people do wrong. I'll be right back. Make sure you watch until the end, because this is really important. So the key things that people do wrong when they're getting a remortgage. Thing number one, I touched on it. They get emotional. They figure, I'm going to stick it to that lender because I don't like how one of the people dealt with me. Don't get emotional. It's math. There is no one sitting at that bank saying, I'm going to get this person or I'm going to get that person. I've worked in banks for 30 years. And it's sometimes interesting when you reach out to a client whose information is just popped up on your screen because you have to contact them about something. And because you do have an overview of their situation and their profile, people think that you've been studying them for the whole day and you're talking specifically to them. Yes, you are talking to them, but you are talking to a customer who you're trying to help. So don't get emotional when it comes to mortgages or anything finance related. Do your very best to just be data driven. Another big mistake that people make, I've noticed this, they wait until the last minute. Life is busy. I get it. We have families, we have jobs, we have hobbies, lots of things going on. But a mortgage is such a big thing and it can cost you a lot of money if you do it wrong. So don't wait until the last minute. Always have a view and an understanding of when your mortgage fixed term is coming to an end. And as it's approaching, start talking to a mortgage broker. Speak to a mortgage broker. I would say the moment that that letter from your current lender lands, speak to a mortgage broker. Tell them, well, this current lender is offering me X, and we can do the math and figure out if other deals out there are going to actually save you money. But when you're speaking to your mortgage broker, big deal, make sure you're open and honest. I've been doing this for a really long time, so I can usually figure things out. I ask questions that I have a clear view of what's going on. Hiding things from your mortgage broker does not help you. It will hurt you because at some point, the thing that you're hiding will come out. And banks don't mind that people are human beings and maybe they've had blips in their finances, etc. What banks don't like is something called non-disclosure. So that's a thing that was not mentioned on the original application that they found out. One of the reasons why banks want to see 3 months bank statements and 3 months pay slips is just to make sure that they have a good overview of what your finances look like. So it's best to be open and honest. Don't hide anything because as a mortgage broker, we work with lots of different lenders, which means if we know everything up front, we're able to find the lender who will lend to you based on that thing. So make sure that you're open and honest. Make sure that you have a relationship with your broker that you can explain things in details. My name's Anthony Lindsay, and I've been in finance for over 30 years. I don't say that to big myself up. I say that because I've done a lot of different things. So I've worked in wealth management, I've worked in collections, and that's key because I've had to deal with situations where the broker maybe hasn't done the best job and things have gone wrong. So make sure that you reach out to me. Here's the QR code. I'm a real person. I'm not an internet influencer. So when you call, you're not speaking to a VA or a PA or a bot. You'll actually speak to me. Your appointment will be with me. And my appointments don't cost anything. I do these videos to help people improve their financial literacy. Hopefully, after watching this video, you'll do your own due diligence and maybe you'll need a broker and you'll come to me. But even if you don't, make sure that you have a standard that you hold your broker to. One of the things that you have to make sure that you hold your broker to is being open and honest with you, being responsive, keeping you up to date. The whole idea or concept of no news is good news is not good for you as a client. So make sure that your broker is being open, honest, keeping you up to date, answering your questions, is available. And sometimes they'll need to tell you no. Sometimes I tell clients no, not because I don't want to do the deal for them, but because based on what I can see, it may not put them in a better situation. And that's really important when it comes to remortgages, because switching banks is good for me as a broker. Because if you are going to work with me, I'm going to charge my fees. But sometimes staying with the lender that you're currently with is going to be what's best for you. That's why I've written my book, A Mortgage is a Really Big Loan. It's available on Amazon, and it's great if you know any young people that just want to understand finance a little bit better, or people that maybe have just relocated to the UK and want to understand finance. Or if you're like a lot of people, you grow up hearing terms and understanding or thinking you understand how mortgages work and finance work, but you don't really. So it's a great book. The things that I cover off in most of my videos, and certainly in the book, are the key parts of mortgages and finance in general, which is credit, income, and deposit. If you're doing a remortgage, then the deposit bit is not as important. But if you are looking for a new mortgage or looking to buy for the first time, then yes, the deposit is going to be important. So let's just look at that. So let's look at your credit. If you're remortgaging, the position of your credit or your credit profile is important. Has it changed since you did your original mortgage? A top tip, you know what I'm going to say now. Check your credit report at least once a year. I would say every 6 months. Every time I'm doing a mortgage for someone, one of the things that I ask for is their credit report from Check My File. 9, 8, I'd say at least 70% of the time, they find something on their credit report that they weren't aware of. Quite often it's a utility bill, or maybe they got a parking ticket and they weren't notified, and therefore they may have picked up a CCJ. Make sure you check your credit report regularly, because this is one of the biggest factors in what products you'll qualify for when you're getting a remortgage. Not your credit score, but your credit profile. Do you have any missed payments, late payments, CCJs, defaults, or maybe payment arrangements? All of these things can potentially disqualify you for the best products. So make sure you are checking your credit report regularly, staying on top of it. Clear small balances, even with a remortgage, especially if you're going to another lender. We want to get you as much affordability as possible. So if you have any small balances, clear them, get them out of the way, and be honest about what's there. So the feeling, or at least the view, is whatever is documented is what is true. So if it says something on your credit report, that is what the lenders are going to go with. So be honest about what's there. And I'm not saying that people are intentionally lying or being dishonest, but quite often their emotion or their feelings about the thing are what they think the lender should go with. So you have a missed payment on a utility bill and you feel that it shouldn't have gone on your credit report. It wasn't an error, but maybe you were away and you forgot to make the payment, and therefore you feel that the lender or the provider shouldn't have put that on your credit report. If it's there, that's what the lender is going to look at. So make sure you stay on top of your credit report. So be open, be honest. Your income, we're going to look at your income now. Know your employment status and know if you're considering changing your employment status. So what do I mean by that? In today's market, a lot of people are looking for ways to generate more money. And if you have certain skills, it may be more profitable if you go self-employed, or if you go on contracts. They can be a lot more lucrative. But if you're planning on becoming a contractor, always speak to a mortgage broker. Although you can get a mortgage as a contractor, there are certain guidelines and certain things that lenders look for. How long have you been working your current contract? Have you already renewed a contract? What is the end date of your contract? So understand your employment status. Understand, are you PAYE? Are you self-employed? Are you 0 hours contract? Maybe this has changed since you did your original mortgage. So understand your income, understand your employment status. Are you thinking about switching to contracting? Think about it, but make sure you speak to a broker because, yes, it might be more money, but you might end up having difficulty getting a mortgage. And how close are you to retirement? This will impact how long you do your fixed term for. If you're approaching retirement, maybe you want to do a shorter fixed term that the way that it's calculated when you do your remortgage is still based on your income while you're working. I do have videos on this, but in short, if you're within a certain amount of years of the state pension, then lenders will need to look at what you'll make when you retire, even if you don't plan on retiring at that age. So if you have the type of job that you can continue to work, you might say, well, I'm not going to retire at the state pension age. But a lot of lenders are going to look at the state pension age and say, well, is this person paying into a pension? Are they able to continue working? So make sure you consider how close you are to retirement in your income, because that is very important. And that's one of the things that lenders are going to look at when they're assessing your remortgage. How to be mortgage ready. All right, this is what you're probably here for. This is what you want to hear is how do you make yourself remortgage ready? What things should you do? What things should you consider? I've gone through some of the things in detail, but what we're going to do is just do a quick overview. Make sure you watch to the end because this is important. So, how do you become mortgage ready? What things can you do to become more remortgage ready? So, whether you're doing a mortgage or a remortgage, first thing you want to do to be mortgage or remortgage ready is make sure you check your credit report. Anything that's on there that shouldn't be there, get it corrected before you apply. Make sure that everything that's on your credit report is a correct and accurate reflection of how you pay your bills. Anything short of that will cause problems, and it will also make you pay more as far as interest rate in most cases. The other thing is, do you need to consolidate? If you're remortgaging and you have other small bills that even if you're paying them, they are still costing you money and money is going out of your household each month, maybe you should consider doing debt consolidation. So check your credit report, look at your other outgoings, pay down small debts. Another thing that you want to make sure that you do to be remortgage or mortgage ready is think about the fixed rate that you want or the fixed period that you want. So do you want a fixed term of 2 years? 3 years, 5 years? As I said earlier, you want to consider when you're going to retire and when you're approaching retirement, that at the point of remortgage that they're looking at your actual working income as opposed to your retirement income. They say people don't plan to fail, they fail to plan. We probably all heard that. People don't plan to fail, people fail to plan. And what does that mean? They don't prepare. They know that their mortgage is coming to an end, or maybe they don't because they don't look at that. And then they wait until the last minute. They put all the pressure on the broker and the solicitor and everyone else because they waited until the last minute. You want to make sure that you're remortgage ready. You're having the conversations with the brokers sooner rather than later, that they can do the research, they can find you the best deals, and they can go through the deals with you. So that's how you become remortgage ready. My name is Anthony Lindsay, and I want to stress to you, I'm not an online influencer. I'm a real mortgage broker who does this every day. The videos that I do are usually a reflection of the conversations that I'm having with my clients and the questions that my clients are asking. So I make these videos that I can share this information without any pressure, without any obligation, in a way that you can listen, then you can check, you can do your due diligence, but you can be a more informed client. This is my contact number. You're not going to speak to a bot or a VA. You're going to speak directly to me, and my appointments are free. One of the benefits of working with me is that I do explain everything. And not only do I explain it, I show you. I will show you what lenders are offering what. I will explain why maybe you don't qualify for a particular lender. And we will always make sure we do our due diligence in advance. So that means that what we do is we look at the criteria, we make sure that you would actually qualify for the mortgage that we are presenting to you. Because if you don't qualify for the mortgage, it doesn't really matter what the rate is. I see so many people, and all they focused on is rate, 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 rate. Rate is important. I'm not saying that you shouldn't consider the rate, but particularly those people who maybe have credit bumps or not vanilla clients, the rate that you qualify for is the only rate that you should be looking at. So the rates that you see on television that are usually advertised, those are for like your vanilla clients most of the time. So what is a vanilla client? Someone that's PAYE, meaning they have a full-time job. Someone with a good credit profile, meaning no missed payments, late payments, CCJs, defaults. It also means in most cases a UK passport. So if you fall outside of those things, you would probably still be able to get a mortgage, but maybe you're not going to get those rates that you're seeing advertised on television. So comparing yourself to those rates is probably not a good idea, and it's just going to cause problems for your broker when they're showing you the rates that you actually do qualify for. Make sure you book an appointment. During the appointment, we'll go through everything. I'll explain everything in detail. Speak to a broker first. Why do I keep stressing this? I stress speaking to a broker first because frequently people wait until they think they're ready. So people will reach out and say, I'll get back to you in, when I'm ready. Don't wait until you think you're ready to speak to a broker. Because if you speak to a broker when you're considering the remortgage or considering the mortgage, they may be able to identify things that would take a month or 2 or 3 to resolve. So speak to a broker. I get it. Some mortgage brokers don't like dealing with people until they're ready to move forward. I'm not one of them. I would actually rather speak to someone when they just have the idea of getting a mortgage, that I can talk them through the process, give them the opportunity to tidy things up and put themselves in the best position to get the best mortgage that they qualify for. So always speak to an open and honest broker, get the information, and always be honest with them that maybe you're not looking to buy until next year, but you just want to make sure that you're prepared. Brokers work with multiple lenders. So unlike going directly to your bank, when you go to a broker, the broker is going to be able to find different lenders with different products that meet your needs. So you're not saving money necessarily by going directly to your bank. Just because you're not paying a broker fee, it doesn't mean that you're saving money, because that bank staff member may give you the best rate that that bank is offering. It doesn't mean that they're giving you the best rate that you qualify for. It also means that you might get a no. So they might say, no, we can't lend to you. But it doesn't mean you can't get a mortgage. It just means that you may not meet the criteria for that specific bank, especially if you're talking about the top 3 banks. Their criteria does tend to be quite rigid. So if you've had credit issues, if you've had, a circumstance where maybe you've missed a payment, got a CCJ, you might find that the big banks aren't able to lend to you, but it doesn't mean you can't get a mortgage. And this is where mortgage brokers thrive. This is where we do the magic, because we're able to talk to different lenders, talk to specialist lenders, find you a lender that will lend to you. We guide you through the process. I think this is one of the most underrated things about brokers. I look at it, and in the industry, maybe brokers don't have a good reputation, but a good broker is going to save you time, save you money, and also walk you through the process. I know that I am available on Saturdays and evenings. Your branch staff is not going to be able to do that. I also help my clients with finding a solicitor. I have new and first time buyers that may want to do some refurbishments, and I can refer them to a builder. So a broker is going to do more than get you a mortgage. A broker is going to support you. They're going to be your admin. There's certain things we'll be able to explain to you. Now, obviously, the legal things, you'll need to speak to your solicitor. But if you need context or an understanding of a thing, then your broker will quite often either be able to answer that question for you or point you in the right direction. Yes, we get paid. So yes, the bank pays us. what's called a procuration fee, and some brokers charge their broker fees. But don't begrudge the broker. The average deal, I would say, takes maybe 2 weeks or a week or maybe 5 days worth of admin when you stack up the phone calls, the emails back and forth, etc. So there's a lot of work that goes into getting a mortgage, especially if it's being done right. So don't be frustrated with your broker because they're saying, yeah, this is my fee. And versus the bank, yeah, you're paying a fee, but you're getting a much better service in most cases. And being a broker is a relationship business. So I have to do a good job for you. Whereas if you are someone that is going directly to your bank, it means that you can probably just walk into your bank and you're walking in there based on the bank's reputation. Whereas with a broker, you're probably going to ask friends and family, well, how is he? Is he responsive? Or he or she someone that I can trust? So we want to do a good job for you that you can refer us to other people. My name is Anthony Lindsay, and as I said, my job is to give you the information that you can make informed decisions. I hope that you will like or share this video because this is a small channel. I don't get hundreds and thousands of views, and that's okay. For me, it's just more important to be able to give you the information that you can go away, assess the information, and maybe if you need a broker, you'll come to me. Make sure you like, make sure you share, and make sure you subscribe. If you've watched this video or part of this video, hopefully you found it valuable. And if you have a question or a topic that you'd like for me to discuss, make sure you put that in the chat. I do respond to all of the comments. And as I said, if you book an appointment, you're having an appointment with me. If you call, the person that's going to pick up the phone is me. So like, subscribe, and put your questions and comments in the chat. And I appreciate you listening and hope that you will join me each Saturday at 10:30 for these masterclasses and mortgage sessions.